got an exciting question that we get a lot from a lot of people. So, Lola, what's the question we're dealing with today?
Oh, this is a good one. Oh, I'm so excited to talk about this. The nerd in me is going to come out a little bit. But basically, the question for today is, I have business revenue, I'm making money, but I have no money in my bank account. The question is, where is my money going?
Ooh, this is a good one because, we get this question. I get this question a lot because I look at some business owners, and one of the things that the people realize or that people say is like, man, the store always has customers in it, or there are always people buying stuff from the website. Products are always sold out. But when the business owner is looking at it, they're like, yeah, where the store is packed, people love the product, we're always selling out, but for some reason, I'm not seeing the money in the bank account. Like, where is my money going? And you know what? That can be a very frustrating thing if you're a small business owner, because you're putting your blood, sweat, and tears into this, and you're just not seeing it on the back end. Now, the short answer to that is going to be what we do with a lot of our clients is we really break it down. We look at a cash flow statement, because once we look at the cash flow statement, we can then start to see some very, very critical telling things about your business. And what we like to call it is following the money. So what do you want to say about that?
I want to say cash is king. Like we talk about this, and I know a lot of we've kind of like beat this point to death, but cash is king. And we talk about like when cash is down, like cash is the king of your chessboard. When cash is down, like you're done. The game is over. And I think that's really important for a lot of business owners. And I think a lot of times business owners associate the amount of money in their bank account with their cash flow. Those are not the same thing. Because one of the things you have to think about when it comes to cash flow is essentially, think about those two words, cash flow. Like, how is your cash flowing is basically what it is. And I think, if you understand that, it will help you have a better understanding of where your money is going and have a better understanding of basically what you need to change. Because I think that's the thing, right? Even with the businesses that we have, the business owners that we support, is once they understand where their money is going, they can make better decisions. And so I think one is, when you think about cash flow, like I mentioned, Terrell, like we tell people this a lot, like your cash balances and what's happening to your cash, because you got to account for two things. You got to account for, hey, who do I owe? Who do I still need to pay? Like, you're looking at, a day's worth of revenue that you've earned, and you're like, hey, I'm doing really well. We brought in 10 grand, but you still got to pay the suppliers, or you still got to pay your employees, or even when you think about, cash that's coming in, like you have people that owe you money. So all of those things need to be factored in when you're trying to think about, hey, how much cash is flowing in and out of my business? So I think those are important things to recognize.
Absolutely. And to take a step back, as I said, because we are your CFOs for your small business, we'll take a step back and let's just walk through it layer by layer. Now, the first thing, with a cash flow statement, as we said, the cash flow statement is pretty much, if you think of it, it's kind of like that map that just shows you, hey, here's how cash is coming in and going out of your business. And here are the different areas where cash is coming in. Here's different areas where cash is going out. And so when we look at that map, we can start to see, is cash coming from your operations, or is it coming from, financing, or is it coming from investors or owners putting more money in? Once you start to break that down, that's where kind of the light bulbs start to go on. Now, one of the very common things that are situations that I see, or let me say, the first common situation I'll talk about is when it comes down to, let's say, you're in a business, let's say you're a service business. And you're like, man, I'm delivering the service, I'm showing up, I have the clients, but for some reason, I'm not seeing the money. Now, one of the common areas that we've seen is that, if you really look, what's happening is they're not billing their customers. And I get it because, shame on me, I was the same way in some respects. To where I would deliver the service, but I wouldn't go in the system to deliver, to generate the bill, to invoice the customer. And
Mhm.
what you don't realize is when you don't get that invoice to the customer, I mean, yes, you delivered the service and you've earned the money, but the customer, for the most part, they're not going to be chasing you down to put money in your pocket. I
Right.
mean, they're going to keep the money in their bank account until you ask for it.
Mhm.
And if you're not generating that invoice and asking your customer to pay you what they owe you, I mean, because it's not like they're doing something bad or they're trying to be malicious about it. It's they're in the process of running their own business. So they have a million other things to focus on, or maybe not a million, maybe they just have a couple hundred things every day to focus on
Yep.
themselves.
Yep.
So they're not like intentionally trying to not pay you. It's just they have a ton of other things going on. So your invoice just reminds them, hey, you know what? So and so provided this service for me. I need to go ahead and pay them.
Yep. No, I think that's good. So I would say, yeah, point one is first of all, bill your customers. I mean, that's important. So if you're asking me, hey, where's my money going? I'm making, I have customers coming in. I'm like you said, especially in a situation where you're providing your services, remember to bill your customers. I would say the second point as it relates to just the day in and day out of your business would be just trying to understand what you owe, right? Like what I guess in this case, accounts payable, if you want to think about it that way. Like, what do you have to pay to vendors? So, like, for example, in the restaurant case, right, is like, what do you owe if your payment is due every 15 days, or if you have a delivery that comes in every once a week or whatever? What's the schedule of that payment? When does it need to come in? When does it need to happen? Because I think what that allows you to do is build enough of a buffer to cover your day-to-day expenses. And if you understand some of the cost that's coming out of the business, then you can understand, hey, how much do I need to have in my bank account? Because you don't want to be spending money that you don't have, right? Or you don't want to, look at the bank account and be like, oh, I have 10,000 or 15,000 or $20,000, and you have a $15,000 payment that needs to come out. Just being mindful of that, I think, is another factor. What would you say? How do you? What would another answer be to this question for that?
Yeah, I mean, I think to this one, I would say is let's look at, do you understand what the cash requirement is for your business? Because what
Mhm.
I also find is when you're a small business, sometimes when you're working with larger vendors, they don't give you the payment terms that they would to a big business.
Oh
So
yeah.
they may require you to pay up front.
Hmm.
Or there have been some of our customers where there's a service that they were using where because they were a small business, the company required them to pay on upon delivery. So if
Hmm.
you're paying, let's say, if you're, make it a simple example. Let's say if you're selling computers, you order 10 computers, and let's say if each computer costs $1,000. So what that computer manufacturer is saying is, you need to give me $10,000 today so that
Hmm.
I can give you these 10 computers. And then hopefully over the next, 30 days to 3 months, hopefully you can resell those computers to your customers. So for a period of time, I mean, if you looked at that cash flow scenario, you'll be upside down for a little while until you sell enough of the computers. And so
Yep.
one of the areas that I encourage business owners to do is like, let's take a look at some of your supplier agreements. Like,
Hmm.
are there agreements where you're required to pay up front?
Yep.
If you are, let's negotiate. I mean, if you've been doing business with them for a while and you have a little bit of history, maybe it's time to revisit that and to talk to them to say, hey, you know what, what if we did where I paid you, 10 days after delivery, which gives you at least 10 days to start selling the product before you have to pay them.
Yep.
And the more you start to, I would say, align when you have to pay them with when your customers pay you, the more you can get those in alignment, the better your cash position will become.
I agree. I think another point to add to that is, one is to negotiate, but I think another thing is just, especially if you're in a position where, you don't have a firm client pipeline. I would recommend actually spacing out how you do those purchases. So like going back to the computers is you don't need to buy all 10 computers. Maybe you say, hey, instead of buying 10, I buy 5. Let me try to sell 5 first before I go and buy, another 5, right? Or even doing a situation where a lot of times especially with Amazon there's a drop shipment option where it's, hey, you buy from, I don't have to hold the inventory, or, if it's something that you can turn around quickly, they buy from you, and then you give them a 7 to 10 day delivery time frame. And in that case, it gives you time because they've paid for the product. You can then go use that money to buy the product without having to come out of your own bank account to cover it. So that's another opportunity or another option, especially if you are a small business and you don't have the flexibility or the excessive amount of cash flow to be able to buy significant amount of inventory, then turn around and try to sell it. So there's definitely ways to put yourself in a better cash flow position.
Now, one thing I'm curious about, even for you, Lola, I mean, how long did it take you, or what experiences helped you understand what you just explained?
Oh, yes. So, in my Fortune 500 experience, I think one of the issues that we always had to work through or discuss was when it came to, especially, and this is a problem that I think from small businesses to large businesses, like even Fortune 500 companies, you have to work through, is just being able to properly manage your inventory. When you think about small businesses, like a lot of them are like, well, I'm not booking any entries, my balance sheet, a lot of them don't even really look at their balance sheet on a day-to-day basis. But the reality is this is cash flow that's coming out of your business. So for me, when I worked, even in some of the roles that I'm working in right now, is just when you look at your sales coming out of your business, you have to be able to balance not just your sales, but also your cost of acquiring the product that you're going to sell. In this case, if you're thinking about, let's say a restaurant or whatever, like the cost to put towards creating that product is something that you have to account for and consider. So for example, with inventory, for us, one of the things that we looked at is if we're trying to hit inventory sales X as a target, let's say we're trying to hit, let's just say $100,000 in sales this month, is do I really need to bring in inventory to cover this month and next month? Right? Do I really need to bring $50,000 worth of revenue or worth of, cost or inventory? Or do I just need to focus on, hey, if I'm trying to sell $100,000, let me bring in just enough. And then depending on some of the turnaround lead time, I can maybe work and get additional out if I have the bandwidth and the time to do that. And so I think for me, this is something that I've seen across Fortune 500 companies, is being able to manage your inventory to the sales target that you're trying to achieve. And, it's a bit risky when you think about it, but it's important because the end of the day, you want to minimize the risk you have when it comes to carrying that inventory. Because at the end of the day, that inventory is cost. And I don't think a lot of people think through that. It's money that you're having to put out, whether it's you're paying people to make the product for you or you're just buying the product offline. All that is cost associated with your business.
Yep. And one of the things that I tell a lot of business owners is, don't beat yourself up for not already understanding this, because, the truth is, even the biggest, the largest businesses, like we've worked
Struggle
with
with
some of
that.
the largest businesses in the world, like
Yep.
they struggle and they don't understand. Now, the benefit for some of the larger businesses is they have entire teams, like they
Yep.
have an entire team of people that can be dedicated
Yep.
to, cash analysis. Well, if
Mhm.
you're a small business owner, you don't have the resources to pay an entire team to watch this for you. So
Yep.
this is one of those areas where I would say, if you are working with an accountant or a bookkeeper, this is an area that I encourage a lot of people to start having a discussion with your accountant about them helping you get regular reports that will give you insight into this. I mean, one of the things that I've done or I guess, our firm has done for small businesses is, where they couldn't afford to bring in an entire team. So we created models for them, or, simple Excel models where they can plug in the numbers and they can help them to start, telling them, hey, what direction are things going? So they can start to see. Because, I mean, to create a cash flow statement, there is some complexity in it, which is why even big businesses struggle with it. Because to look at a cash flow statement, you got to look at how the income statement and the balance sheet flow together and how they interact. And if you're not familiar with accounting and finance, you're probably not going to know it. And so I always tell business owners, don't feel bad because you don't know this, because to be honest with you, your accountant should be the one helping you figure this out. And I would say, if you're in a situation where you're only dealing with an accountant, where you only talk to them when it's time to get your taxes done, if you're running a business, my serious advice to you, it's time for you to step up your support level. It's time for you to actually start interacting with a qualified finance or accounting person for your business on a regular basis, because they're supposed to be giving you information and insight that will help you kind of think through that. So you understand it. So as you're making decisions day to day, you can make decisions with these parameters and with these numbers in mind. Because if you don't have that on your team, it's going to be very difficult for you to navigate this side. You're going to continue having this issue of having a ton of sales, but asking yourself, where is my cash going?
Right. And I think understanding it is also very important, which is why we created a course called Follow the Money. It's about your cash flow statement. Terrell, you want to tell us a little bit about that course?
Yeah, so I'll tell you, the course Follow the Money is, exactly what we talk about. It's, breaking down the cash flow statement, where we actually break down the different pieces. We talk about what goes in it, because for you to really understand the value of it, I mean, you want to make sure that you understand, hey, what's going into this. And what I tell a lot of business owners is, let's say if you have a bookkeeper that is doing the books for your business, send this course to your bookkeeper and tell your bookkeeper, hey, this is what I want for my business. Because what I will say is, no offense to bookkeepers, but most bookkeepers aren't trained in advanced accounting and finance. But what I have told some business owners, some people that have reached out to me for questions, is they say, hey, I have a bookkeeper. I'm like, send your bookkeeper this class or this course. Ask your bookkeeper to take this course and tell your bookkeeper, hey, I am looking for you to provide this type of information to my business. And if the bookkeeper comes back and says, well, that's not something I can do, then it is time for you to upgrade and move on to someone that can provide this level of information. Because I tell some people that, that come to me and come to our business and our firm for the first time, and they're like, this is a little bit more expensive than what I'm used to paying. And one of the things I tell them is, well, based on the level of information that we're going to provide you, you should be able to grow your business more than what it costs you to hire us. Because if what we're providing you doesn't provide you with enough insight and reduce stress and enough visibility for you to make better decisions about your business, then we're not doing our job. So I always say the same thing. If you're going to be working with a bookkeeper, or if you already have an accountant, like I said, even if you have an accountant that does your taxes, what I would say is just tell them, hey, I need you to provide a cash flow statement for my business on a regular basis. Chances are most people who are doing your taxes are probably not going to be able to do that, or they're physically able to do it, but that's just not the area that they do. They just focus on doing your taxes.
They don't have the expertise.
And what I tell people is, a bookkeeper and a tax preparer, their job is not to help you grow your business. Their job for a bookkeeper is just to make sure your books are done, your accounts are reconciled. A tax preparer, their job is just to make sure your tax return is to take what your bookkeeper does and then just make sure your tax return gets done. But you really need someone that helps you understand the numbers to actually make smart decisions. And that is exactly what we do on this podcast. So tune in for the next episode, where we will be diving into more questions that business owners have, and then our advice and our insight to help you navigate that. We get it. Keeping track of your finances can seem pretty overwhelming when you're running a business. Achieving your financial goals in business should not be a guessing game.
That's why it pays to work with someone that can take a hard look at your financial numbers and not add more stress to the balancing act of running your business. The T.O. Turner Group will provide a clear and concise explanation to your financial standing. The T.O. Turner Group will simplify finance and help you make smarter money decisions in your business.